Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-specific queries on this program. Top market experts guide you through your questions on the investment portfolio that you have, the specific stocks that you are feeling stuck with or you are looking out for exiting with some profits there. Ask all these questions on the number that's flashing on your screens. You can also send in along with your name, location and your contact details, as we can also give you an opportunity to speak live to our top market experts and also get a custom made advice for yourself as well. Now you can also log on to our YouTube channel in case you're watching us live there. Then you go to Daily Calls Live and use the comment section there to send me your questions. I'll be happy to pick up those questions and also take it up with our top guests as well. Let me quickly first look at how the markets are trading at halftime. Remember, we had started off on the back foot today. We're still about 100 points lower now and 25,184. So it is looking like that the Monday is panning out with a lot of blues right now. Everything seems to be in a soft, cautious nervousness kind of sentiment that is creeping in. India VIX is the only index that's up in double digit. It was at least in the morning 10% higher. Let me just quickly check that for you right now. Yes, it's still up by about 10 odd percent. So you only have two indices, sectorally that are up. That's the banks, PSUs, private banks, and about to it, some media stocks that are also holding up higher in trade. But all the other sectors, they've slipped, lower in trade today. IT, FMCG, oil and gas, metals, infra, small and mid caps, real estate, pharma, all of these stocks are in fact lower in trade. What about the stocks? On the Nifty, you have Adani Ports as the top mover. You have Bajaj Auto, Interglobe Aviation, Shriram Finance, Bajaj Finance, SBI, Axis Bank. So, large part of those banks, NBFCs, private sector and PSU banks that are still holding up in trade. Now, let me just quickly welcome our guest on board, Nilesh Jain, Head and Vice President of Technicals and Derivatives Research at Centrum, who's joining in. Hi, welcome to you, Nilesh, and good to have you with us on the program. Well, we started off this new week with some cautiousness, and we are looking at some weakness on the D Street across the board. We've managed to end 3 weeks with gains, but beyond that, again, some more nerves that are getting tested. What's your approach in the markets right now?
Very good afternoon, Sakshi. Absolutely. So the week has started on a cautious note on the back of, negative global cues that are coming in from the US market specifically. So given this kind of, global development that we are witnessing, we are likely to see this kind of volatility in the market going forward. Now, coming back to the levels, we did see a good momentum all the way from 24,600 to the level of 25,330, and after that we have seen some bit of profit taking today. So today being a first day of profit taking, there could be possibility of some consolidation, and this consolidation is a healthy sign. As long as Nifty trades about 25,050 levels, the undertone remain bullish. Buy and decline should be the strategy. Going forward, we are expecting a gradual upmove to continue towards 25,300 to 25,400. On the lower side, as mentioned, 25,000 to 25,050, that's the important support zone. So ideally, that should be the stop loss for the long position. Now coming to Bank Nifty, it is showing relative outperformance compared to the Nifty index. Not only today, in fact, last few trading sessions, we have seen this kind of outperformance in the Bank Nifty. And that is where we are getting more comfort. We expect Bank Nifty to move towards 57,000 to 57,500. These are the spot levels. And 56,000 is a very strong support, psychological support, as well as on derivative front, we have seen huge amount of put writing. So the setup looks positive for the Bank Nifty as well, and we can expect this momentum to keep going on the upside. Now, this is a kind of volatile market, as mentioned, where the India VIX, the volatility index, where we have seen a huge spike of over 10% today. So the better approach and strategy should be to focus on stocks, focus on sector. Where we are witnessing a good momentum, the focus should be there, and that is likely to continue.
Okay, Nilesh, let's actually get started with all our question and answer series now. We have so many of our viewers who are joining in on our YouTube, so welcome to everybody. Many are writing their questions on WhatsApp, so hold on. We will be taking all your questions with Nilesh now. Let's take the first one. This one is from Jay Rami Reddy Guram. Jay says, good afternoon, ma'am. Thank you so much for this show. It's a great show and I get to learn a lot about investments. Please let me know about silver, especially Kotak Gold Silver Passive Fund on Fund. I'm ready to invest 5 lakh rupees here and I want to know what's your suggestion. Well, first, Jay, you know what exactly you should know is that gold and silver prices have already shot up in an unprecedented manner this year. 61% rally for gold, almost a 70-75% rally for silver in just year to date basis. We've not even finished this year, that is. And if you look at what's really happening in silver ETFs is that they are trading at a premium. Now there's a lot of FOMO driven rally that's taking place. Most of the experts are really saying that investors of fund on funds in gold and silver at the current stage or ETFs are actually paying a hefty premium to what the underlying value of actual silver is at this point in time. So the big question is it wise to pay that premium? Because everywhere you're talking about silver, we are seeing an unprecedented rally. And would you want to pay a hefty premium and enter at a 1.5 lakh rupees or 1.6, 1.7 lakh rupees of a price that you are getting at this point in time? That's the key question. Let's ask Nilesh. What's your view, Nilesh?
Well, Sakshi, very well put. See, if you see gold and silver, we have seen a euphoric move in this both precious metal. Specifically, silver has outshined the gold in last couple of months. If you see, in dollar term, it has surpassed 51 mark. The momentum looks strong. If you see last 15-year chart after 2011, this is the first time the silver in the dollar term it has crossed the 50 mark. So it has given a multi-year breakout. But you should remember that the RSI, the momentum indicator, if you see on the weekly chart, has gone beyond 86 level. That's extremely overbought condition if you see in the silver. So in this kind of scenario, it is not advisable to chase the momentum at the high level. Historically, we have seen the history that whenever it reaches 86 or beyond 85 level, the RSI, we tend to see some bit of profit taking, and profit taking is very much due. This has been 7 or 8 consecutive weeks of gain. So not advisable to buy any, in terms of making a fresh investment in the silver as well as gold. The better approach should be to go with a SIP route. SIP should be the better approach, or you should wait for some meaningful decline in both gold and silver. Now coming to upside, although we have upside target of $55 to $58 in the near term, but having said that, better to wait for some meaningful decline, stop loss, or I would say support that is coming somewhere around $46. So the risk and reward is clearly not favorable at current level. So better approach, as I mentioned, the silver B, silver ETFs are available, but there are shortages of physical demand. The physical, the physical delivery is quite shortage. So because of that, you are witnessing some stoppage in the FOF fund that we have seen in the Kotak as well. So better approach, as mentioned, it should be through ETFs and better wait for some meaningful decline.
Okay, fair point. I hope this has truly helped you out, Jay, in understanding how to go about this entire space. Let's take the next question. This one is from Shomalia Biswas. He's from Kolkata. He says, I have 13 lots, Nilesh sir, of Nifty for 20th October expiry. This is 25,500 call option that I bought at 41. Should I hold it for BTST or not is the key question for next week.
See, first of all, if you see the structure as mentioned, there could be possibility of some bit of sideways moment, sideways consolidation, because we have already seen a good spurt in last 2 back-to-back weeks. After such spurt, you usually witness some bit of retracement, and quite possible that retracement may turn out to be a kind of a time decay for your premium. As far as the range is concerned, 25,000 to 25,400, that's the broader range for this week and next week as well. Since you have already bought into this particular call option, I would suggest to keep a stick stop loss in the underlying. That is coming somewhere around 25,100. As long as it holds about 25,100 in the spot level, there could be possibility of some bit of pullback move. So that pullback move may give you a good opportunity to exit on the upside. But since the momentum is lacking, I would suggest if at all you are making any sort of money on the pullbacks, better to exit.
Okay, got that. Better to exit. Let's take the next question. This one is from Satya, he says, hi Sakshi, good afternoon. Can you please find out from Nilesh sir, is it better to switch my current position from NCC to either NITCO or NMDC for the next 12 months? Satya, it would have been really good if you would have shared the levels at which you bought and what's your time horizon as well. That would have really given our guest to give you a better view, an overall view by understanding what's your current situation is to really get you that view. But let's try and find out NCC versus maybe NMDC over the next 12 months. Where do you see more benefit?
See, first of all, both are from different sector. There is no direct comparison. Now, coming to NCC, as far as technical
Yeah.
structure is concerned, is looking slightly on a weaker side. A couple of reasons for that. It is constantly facing resistance at its long-term 200-day moving average, and it is also trading well below all short-term and long-term moving averages currently. So, as of now, it's an avoid. If it breaks 220 level decisively on the upside, then there could be potential upside will open up for 240 to 260 on the upside. But if you have already bought into this particular counter, keep a trailing stop loss at 200. That should be a stick stop loss because below 200, it may slide further towards 180 as well. Now, coming to NMDCs, comparatively, this stock is better placed. We continue to remain bullish on metal space as a whole. This particular counter, in fact, has given a good multi-month breakout on the chart. So, given a time horizon of 8 to 12 months, I think this holds better perspective. On the upside, we may see the levels of 85 to 90 going forward, keeping a stop loss below 72. This particular counter can be added in the portfolio. But comparatively, if you ask me to choose any one particular stock out of these two, NMDC would be my preferred pick.
Okay, I hope this has also helped you out. Let's take Ankur Modi's question next. Okay, Ankur says, hi Sakshi, good afternoon. Hope you're doing well. I'm very well, Ankur. Thanks for asking, and I hope the same for you. The question that he has is on BLS International. He says the stock has fallen massive today and is now seeing some recovery. So I want to know whether in the short-term panic, what should exactly be investor strategy, or is this going to be a stock that is going to be under pressure for some time now? Yes, we did see about 16-17% drop right in the opening of the trading session today. We had marked this stock for all our viewers in the morning show as well. The key reason was that the company has informed exchanges that it has been debarred by the Ministry of External Affairs to participate in any government tenders for next 2 years. There have been some issues because of this. The government has decided to take that step. Although BLS has also said that they are looking at whatever options that they have legally at this point in time to look at what's really taking place. But the stock has recovered. It's now at the day's high, but still 9% lower. Nilesh, how would you advise investors who still have positions in BLS International now?
See, first of all, it depends at what price that one has bought into this particular counter. Now, given that today's correction with a big gap down, it took a very strong support at 275. That is acting as a strong support zone. Reason being, last year in the month of June as well, we saw a similar kind of sell-off. And prior to that, we saw in the month of March as well, last year 2024, similar kind of sell-off. But both the occasions, the counter took support somewhere around 275. This has been a third instances where the stock is witnessing a sharp rebound from the lower levels. Now, if we see the history, after such pullback, there could be possibility of some bit of selling pressure once again might emerge at the high level. But this pullback may extend towards 320, 330. If you get the levels of 330 to 355 at all, that should be a good exit opportunity for the long position if somebody is already holding. In terms of making a fresh entry, it's a complete avoid. Not advisable to chase or take any contraband at current level. But for those who are already holding the long position, can keep a stop loss below 275 and stay put for a pullback towards 325 to 335. Exit on pullback should be the strategy.
Okay, got that. I hope this has also helped you out. Let's take another question. This one is from Raju Tiwari, also our YouTube viewer. Says, can you please advise on Tata Motors? I'm holding this stock since 375 level and I want to know what comes next after having accumulated at 575 as well for a long-term investor. But a good day to ask about Tata Motors, remember, as a consolidated entity with both passenger vehicle and commercial vehicle business, today is the last day when the stock will be reflecting that business to you. Today is also the last day in case you are looking forward to invest in Tata Motors, as a consolidated entity, and also be eligible for the demerger and yet be eligible for the new shares that will be demerged and listed for the commercial vehicles if you want to get free shares for that, because 1:1 is being decided already and tomorrow is the record date. So today is the last day for that. But the good question is, but the good part is that Raju Tiwari has been investing in Tata Motors since a long time, from around 375 odd level. So despite an underperformance in Tata Motors this entire year, the stock has dropped by 10%. In last 1 year, it's dropped by 28%. You're still holding on to profit. So you got a very good price entry at this point. And the good part is you're still thinking of being a long-term investor. Nilesh, how would you advise?
See, first of all, as you have mentioned that he's holding since a long-term investor in this particular counter. The stock did see the levels of 1140 as well at the peak that was seen last year, 2024, in the month of July. But if you see last 2 years, it has given a zero return. It is exactly at the same level that was seen in the month of July 2023. So no return, no movement at all in the past 2 years. It is still available at those levels of 666. From a longer term perspective, yes, it's a very good stock to be into. Given the kind of underperformance that we have seen, there could be possibility that this time-wise correction might get over soon, and you may see a gradual recovery going forward. Do not expect any V-shaped recovery, but yes, if you can give another 2 to 3 years in this particular counter, then there are better perspective available, and there are high possibility of stock moving towards 1150 to 1200 as well. But for that, you need to give another 2 to 3 year or 4 year kind of time frame. And at present, we are not advising to buy in terms of making a fresh entry. This advice only for those who are already holding the long position. In terms of making a fresh entry, I would rather wait for a breakout that is placed at 730. On multiple occasions, stock faced resistance at 730. So better strategy would be to buy on breakout, which is placed at 730 level. Then probably we can see a momentum to keep going towards 900 to 950.
Okay, got that. I hope truly this has helped you out. Let's take the next question. This one is from Vineet Kulkarni. He wants to know about CE Infosystems, another stock that really went up sharply in trade today. That's Map My India, viewers. And today, right now also it's holding above 6% higher in trade. Now the key reason why the stock had really zoomed sharply was also because the counter came into effect after some developments took place in the country. And we have actually seen that the Ministry of Railways has also appreciated the company's navigation system in an ex post as well, and the stock moved up sharply. Your suggestion on CE Infosystems, can it be a stock which can be held on for long term?
See, long-term time frame, I think it's very difficult to predict as of now, because we have seen a lot of consolidation. In fact, if you see last that was seen in the year 2023, not only that, in the year 2022 as well, the stock was still available at 1800. So effectively, last 3 years, no returns in this particular counter. And I feel this kind of consolidation may continue further. But if somebody is already holding the long position, the good part in this particular counter is that it has a very strong support at 1570 to 1600 zone. So 1570, 1600 is acting as a very strong support. There could be possibility of a follow-up move after today's spurt that we have seen after gap up opening. That counter may move towards 2000 to 2200 on the upside. So from a trading perspective, it's a good bet to initiate long position at current level and on decline, keeping a stop loss below 1600, 2000 to 2200 quite possible. But for next 1 year, I think on the upside, it can move towards 2400 to 2600 as well. But there are multiple hurdles to watch out for.
Okay, got that. Let's take a few questions that are actually coming in on our WhatsApp as well. So let's start taking some questions there. We have this one coming in from Ravi Kumar from Noida. Okay, this question is also on BLS International. And, we've addressed this question. I hope, Rajiv, this has answered your question already. In case you have a further top-up question, please do send us your question again. Mohit from Ludhiana says, good afternoon, I want to know about SAIL. I've got 500 shares of Steel Authority at 104. My time horizon is 3 years. Any suggestion on this one, Nilesh?
We no doubt bullish on metal space as a whole, but still Authority being a PSU stock, we have seen a lot of underperformance. So if you want to bet into the metal space, then I think there are better options available like Jindal Steel and Power, JSW Steel, and within aluminum space you have Hindalco Aluminum, Nalco as well. So you have better options available if you want to play purely in the metal space. As far as Steel Authority is concerned, given the kind of time frame of 3 year plus, I think yes, we can expect a gradual up move to continue towards 165, 180, or maybe 200 kind of levels can be seen going forward. But what is important is that you have to keep a trailing stop loss as of now, which is coming somewhere around 115. That's a very strong support zone. So keep an eye on that particular level. If it breaks, then you have to review. And going forward, as mentioned, the structure is looking slightly positive, but a gradual up move is something that you can expect towards 150 to 160 from next 1 to 2 years perspective.
Okay, thank you so much, Nilesh, for being with us on the program and helping all the viewers out with all their queries as well. Always appreciate your time with us. Thank you so much, and here's wishing you again, great time amidst the festivities, and of course, we'll catch you around Diwali too.
Thank you, Sakshi. Thank you for having me on your channel.
Thank you. All right, viewers, let's actually now get you to speak to